Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money moves that shape our world. And sometimes these moves are as important as a chess master's next step. And today we are looking at Ondas Holdings Incorporated and their recent report. Today we are diving into a report from Ondas Holdings Incorporated filing with the US Securities and Exchange Commission, or SEC as it is more commonly known. Now, this isn't just any report, it is a Form 8K, which means something pretty significant has happened and the company needs to tell everyone right away. Think of it like a company announcing a surprise plot twist in their ongoing business story. Before we jump into the juicy details, if you love getting these kinds of corporate insights without the jargon, make sure you hit that subscribe button. And hey, we've got a fantastic Discord community where we break down these filings even further. The link is in the description below. So, what is the big news? It turns out Ondas Holdings Incorporated, through its subsidiary Ondas Autonomous Systems, or OAS, has been making some big moves with its convertible promissory notes and warrants. These are basically financial tools that can turn into ownership later. The company issued notes worth a total of $5.2 million in warrants that could allow investors to buy shares of OAS common stock. Some of these investors are pretty connected, like an entity linked to the company's own chairman and chief executive officer, and another linked to a former director. Now, the real story here is what Ondas Holdings is proposing to do. They've told the people who hold these notes and warrants that they can essentially swap them. They can convert their notes into OAS common stock and then immediately exchange that stock for shares of Ondas Holdings Incorporated's own common stock. This whole process is being called an exchange. They asked these holders to let them know if they were interested by the 13th of December 2025. And here is where it gets really interesting. As of the 12th of December 2025, 10 out of 11 of these holders have said yes, they want to participate if no one changes their mind and no one else signs up. After this exchange, Ondas Holdings Incorporated will own almost all of OAS, about 99%. The investors who participated will end up owning just about 1% of OAS on a fully diluted basis. To make this happen, Ondas Holdings Incorporated is planning to issue a significant number of its own shares to these investors. They estimate this could be around 6.8 million shares. The exact number of shares will depend on the price of Ondas Holdings stock on the Nasdaq on the day before the final agreements are signed. Now, there is a scenario where all 11 holders participate. If that happens, Ondas Holdings Incorporated would own a full 100% of OAS. In this case, they would issue even more of their own stock, an estimated 7.3 million shares. Again, the final number will be based on the stock price at the time. This is kind of a big deal, and it is going to have a financial impact. The company has done some early calculations and they expect to record a one-time non-cash charge in the fourth quarter of 2025. This simply means they anticipate a charge that affects their profit and loss statements, but it doesn't involve actual cash changing hands at this moment. Think of it like an accounting adjustment for a significant event. If 10 holders participate as expected, this non-cash charge is estimated to be around $56.6 million. And if all 11 holders decide to go through with it, that charge could be around $60.5 million. This charge will show up in their financial reports for the year ending the 31st of December 2025. The company is aiming to finalize these exchange agreements sometime during the week of the 15th of December 2025. Now, it is important to remember that a lot of what is discussed here, like the exact number of shares or the final cost of that non-cash charge, are estimates. The company calls these forward-looking statements, which is a standard legal term for predictions about the future. They're basically saying, this is what we think will happen, but it is not a guarantee. Things like stock price fluctuations and general market conditions can always change the outcome. They are required to tell you that their actual results could be quite different from what they are projecting today. And finally, just like with any official report, it needs to be signed off. This particular report is signed by Neil J. Laird, who holds the title of Chief Financial Officer. This confirms that the company is officially submitting this information. So, what is the big picture here? Ondas Holdings Incorporated is effectively consolidating its control over its subsidiary OAS by buying out its investors through an exchange of stock. This move will likely simplify their corporate structure and potentially give them more direct control over OAS. As operations and future, the significant non-cash charge signals the cost of this consolidation. But it is a step they're taking to streamline their business. Looking at this as an investor, you want to see how this consolidation impacts the overall company's roadmap and its financial health moving forward. It's a strategic play to gain more control, but the market will be watching closely to see if this leads to improved performance and profitability. The key risks to watch will be how well they integrate OAS and if the increased ownership translates into better financial results, as well as the continued volatility in their stock price. Alright, that is our breakdown of Ondas Holdings Incorporated's latest filing. What do you think about this corporate maneuver? Let us know your thoughts in the comments below. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe for more deep dives into the world of corporate finance. And seriously, check out the Discord community linked in the description. It is a great place to connect and learn. Thanks for watching, and we'll see you in the next one.